Hello and welcome back. Welcome to Chapter 16, Job Order Costing, Principles of Accounting 2. I'm your host, Dr. B. As always, if you have any questions throughout the chapter, please feel free to unmute your mic and ask your question. Okay, let's first, before we talk about job order cost systems, we need to talk about what is a cost accounting system. A cost accounting system is a system that manages all of the costs within the business. The cost accounting system provides the reports to us. We enter all the data into the cost accounting system, right? As you know, pretty much everything we do these days is electronic through a computer. The same is said in accounting. We typically don't do anything by hand anymore. So what we do is we enter all of the related costs to manufacturing in the computer system, the cost accounting system in our case. And that provides us with the cost reports. There are two types of cost systems that amount to the cost accounting system. There's what we call a job order cost system and a process cost system. Here's the difference between the two. A job order cost system is where we track the cost by the job. For example, a customer comes in and places an order with our guitar manufacturing company. That customer order, that is one job. It's a job. Yeah? A job, think of a job as a customer order. A guitar manufacturer is a specialized type of business. We manufacture based on the customer job. Yeah? That's a job order system. We manufacture by the individual customer order. That's a job. The other type is called a process cost system. When you hear process cost, think continuous. Continuous. Process cost companies would include things like an oil driller, a ice cream manufacturer. Those types of companies continuously process. They continuously process their products. That's the process cost system. Don't worry, we'll talk more about the two. Uses of product costs. Product costs help us to set prices, control operations, and to develop financial statements. Drew, you good?
Yeah, I'm good.
Okay, sounds good. In a job order cost system, this system provides costs for each quantity of a product that is manufactured. Okay, what does that mean? As I said earlier, the job is based off of the customer order, the individual customer order. That is a job. Okay? The costs associated are the costs of manufacturing. Direct materials, direct labor, factory overhead. And those costs are based off of the amount of inventory that we are creating for that job. We our guitar manufacturer, we do it based off of customer orders or batches. The word batch means I make a certain amount of inventory in one run. Okay, a run is where I spend a day or a few days manufacturing the same product, and I'll manufacture a whole bunch of them. That's a run. And those runs, when they're completed, they create what we call batches. You don't have to worry too much about that. I just want you to understand what a batch is. But for the most part, job order cost systems, we focus on customer orders. And an example of us would be the guitar manufacturer. We manufacture guitars based off of customer orders.
Yes, I can see.
What's that, Drew?
I'm listening. I'm listening. I'm just.
Okay, awesome. Thank you. Okay, so that's the job order cost system. The process order cost system is a company that manufactures continuously. An example of this would be oil refinery, paper producer, chemical processor, a food processor, an ice cream manufacturer, a milk processor. When you hear the word process cost system, think continuous. When you hear job cost system, think individual customer orders. So job, individual. Process, continuous. In our company, we have direct materials, work in process, finished goods. To create a single product, we have direct materials, direct labor, and factory overhead. And just like we learned about in the last chapter, direct materials and direct labor are part of prime costs. Direct labor and factory overhead are part of conversion costs. And all of these costs are associated with manufacturing a product. The job order cost system helps us to summarize those costs according to the customer's jobs. There will be work in process and finished goods and cost of goods sold associated with each job order. And the costs are organized based on work in process, finished goods, and cost of goods sold. I'll show you what that looks like. Let's say our company, we got an order in from the music store. Okay, the music store approaches our guitar company and says, "Hey, we'd like to order 100 guitars." Awesome. So that's one job. It's job number 69. Then the customer calls again. Another music store calls and says, "Hey, I want to order 25 guitars." Great. That's job number 70. Then another music store calls us and says, "Hey, I'd like to order 5 guitars." Great. That's job number 71. Then another seller calls us and says, "I'd like to order 7 guitars." Great. That's job number 72. Right? Each customer order is a separate job. Now, in this pictorial, we see where each job is in its place. Okay. We have our raw materials that sit in our raw material storeroom. We have work in process, we have a warehouse, and then we have our customer. Raw material sits in the storeroom. When I start a job, I take it out of the storeroom and I put it into work in process in the warehouse where I'm manufacturing them. I apply direct material, direct labor, factory overhead to the manufacturing process. And then when I finish that work in process, I transfer it to finished goods. When they become finished goods, I then ship them to my customer to complete the sale, converting them from finished goods to cost of goods sold. Talked a lot about this in the previous chapter. So, as you can see, the jobs are at different stages. If you look at job number 71 and 72, they're both in the work in process stage. Job 71 is in the assembly department. Job number 72 is in the wood cutting department. Both are part of work in process. But you can see the physical flow. Starts as raw materials, goes to work in process, becomes finished good, then we ship it to our customer. As it makes its way through the process, it adds up cost. We'll talk about that. In job order costing systems, we utilize the perpetual inventory system. You probably remember the term perpetual inventory system from Accounting 201. Perpetual inventory system means we count the individual units of inventory as we sell them. Perpetual. Continuous, yes? Perpetual. Okay. So we use, to track our jobs and to track our costs on each job, we use these things called inventory ledger accounts. Inventory ledger accounts track the individual components of inventory. In our raw materials inventory, we have hickory, oak, maple. All of these are types of wood. The wood is a part of raw materials. Okay, so raw materials inventory, we add up the cost of each type of wood and how much wood we have of each type. That's on our materials control account. When a customer places a job order with us, we receive the customer order, becomes a job. When I put it in a work in process, I take the raw materials out of raw materials using the control form. It becomes work in process. Work in process, I'm adding my direct material, direct labor, factory overhead to complete the job. Once the job is complete, I take the job out of work in process and put it into finished goods inventory until I then sell it to our customer. The materials ledger is the general ledger of which is a controlling account. The materials ledger is increased when I receive the reports and decreased based off of materials requisitions. Think about it this way. When I purchase raw materials, I increase my raw materials account because I am receiving more raw materials. I decrease my raw materials account when I am transferring raw materials out of raw materials and into work in process. Here's how that looks. Here's how that works. There's a journal entry that we would make for this, okay? We, as you recall, to increase a asset account, we debit the asset account. To decrease an asset account, we credit the asset account. So when I purchase more raw materials from my supplier, I debit raw materials and I credit cash, right? I'm purchasing raw materials, that means I debit my raw materials account and I credit cash because I'm reducing cash to pay for the raw materials. Then I get a customer order in. When I receive the customer order, I need to transfer the raw materials out of raw materials and into work in process using the requisition form. To do that, the journal entry would be, I credit raw materials and I debit work in process. Credit raw materials, debit work in process. What that does is I'm transferring it out of raw materials and putting it into work in process. So credit raw materials, debit work in process. All that does is I'm transferring it from one asset account to another, right? And I do that using the materials requisition form, as you can see in this example. it's important that businesses track all of their materials at every step. When we purchase raw materials from our vendor, we use this thing called a receiving report. It verifies the amount of that you received and the condition that you received it in. When the supplier sends their invoice, their bill, to us, we compare that invoice with the receiving report to verify that we received everything that we ordered and that it's in good condition. Then when I'm satisfied with my receipt of my inventory, I debit raw materials inventory and I credit accounts payable. Remember, I received the bill, but I have not yet paid it. Therefore, it becomes accounts payable. Debit raw materials, credit accounts payable. That's the journal entry I would make when I receive my invoice. When I'm ready to use the raw materials for a job, I complete what we call a materials requisition form. This form serves as the custody basis for the raw materials, also known as chain of custody. And that chain of custody goes to what we call a job cost sheet. The direct materials used for a job get entered onto the job cost sheet, which is a part of work in process. The job cost sheet accounts for the raw materials, the direct labor that we use for that respective job. So the job cost sheet, how is it created? How do we transfer it out of raw materials? We debit work in process and we credit raw materials, as I said earlier. And when we do that, we're taking it out of raw materials and putting it into work in process. That is the journal entry that we would make. Now you're probably wondering, oh, Dr. B, when do we make these types of entries? These entries are called adjusting entries, and you probably remember that from Accounting 201. And we typically do that at the end of each month. So what about labor? As I said, for each job cost sheet, we track the direct materials used for each job and the direct labor used for each job. Go ahead, Drew. Do you have a question?
No, I'm just saying. I've done this before.
Yep, exactly. Yep.
In one of my first jobs, I actually did the time ticket thing.
Oh, you did? Oh, cool. Yeah, I'm happy you have some experience with that because now we're putting it into this context. Yep, wonderful. So employees, we need to track their labor for each job. Okay, how do we do that? Employee clocks in and out for work using the time clock, right? When the employee punches in, we start counting the minutes used for each respective job. This measures the amount of time that employees spend on each job. We call it, these are called time tickets. The time tickets are allocated to each respective job. And how do we figure that out? We take the hourly rate of the employee times the hours worked on that respective job to find the cost for the labor for that respective job for that employee. And if there's more than one, we just simply add up those costs. Just as we see here. It's kind of cool. I like that. It's easy. Well, and so at the end of the month, we, of course, as you know, we need to make a journal entry for the labor. We did one for the materials. You got to do one for the labor. So we debit work in process to increase our work in process, and we credit wages payable. right? We haven't paid our employees yet, but they accrued the wage. Yeah? Debit work in process, credit wages payable. That's the journal entry we make at the end of each month to increase the work in process to allocate the cost. Now, what about factory overhead? As we mentioned before, factory overhead is one of those indirect costs. We cannot directly trace the factory overhead to the manufacturing process for each unit. However, there are a couple of methods that we would use. Factory overhead includes manufacturing costs except for direct materials and direct labor, as you know. The cost of manufacturing a single unit, we'd have direct materials plus direct labor plus factory overhead equals the cost of a single unit. Factory overhead includes things like indirect materials, indirect labor, factory utilities, depreciation, taxes, all that good stuff. So we need to allocate some portion of our factory overhead to the respective jobs. There's a couple of methods of doing it, but this is one method I want to show you here. To allocate factory overhead, we debit factory overhead and we credit the indirect components. How do I want to say this? We credit materials, wages, utilities, depreciation. These are all the indirect ones, right? So we debit factory overhead and we credit all of these other accounts to increase our factory overhead, to allocate our factory overhead. And yes, we would make that journal entry at the end of each respective month. Factory overhead is a lot different because we're talking about indirect expenses. We can't allocate indirect costs we cannot directly trace indirect costs to a specific job. So therefore, we allocate it to factory overhead. There's a couple of ways that we allocate factory overhead. We call this cost allocation. It's where we assign cost to cost objects. We learned a little bit about this in Accounting 201, the activity-based costing, a little bit, but we're going to learn more about it today. Activity-based costing is where we identify the activity base. Okay, activity base is usually labor hours, machine hours, or direct labor cost. Those are the bases of activity for factory overhead. Labor hours, machine hours, direct labor cost. We use that base to allocate the respective costs for factory overhead. So how do we do it? There's a couple of methods that we determine factory overhead rates. Factory overhead rate can be a straight line rate. You remember straight line from depreciation, Accounting 201. But we can apply what we call a single plant-wide factory overhead rate. We can, and there's other methods, but that's one of them. And we'll talk about that one now. The predetermined factory overhead rate is calculated by taking the estimated total factory overhead cost divided by the estimated activity base. So let's use an example, our example. The overhead cost for the year for our company is $50,000. The activity base is 10,000 direct labor hours that we budgeted for the year. We expect, in other words, we expect to use 10,000 direct labor hours throughout the year in the manufacturing process. So we take our total factory overhead divided by the total direct labor hours. That's our activity base. So 50,000 divided by 10,000 is $5 per direct labor hour. So in other words, $5 per unit is the allocation for factory overhead. And we call this activity-based costing. The method for accumulating and allocating factory overhead costs is activity-based costing. We use we can use different overhead rates depending on the type of factory and overhead factory. This would include things like inspection, moving, machining. These are all activities. We'll get into more detail about that a little bit later. And the factory overhead rate is applied to each job, as you would expect. So, like I said earlier, in our example, $5 per hour per unit, right? So if it's $5 per hour, we used 6 hours on this specific job, 5 times 6. You see the application process. So, for example, $5 per hour, we use 350 hours for job 71. That's 1,750. You multiply the factory overhead rate times the hours used per job. The journal entry for the factory overhead is we debit work in process and we credit factory overhead. Debit work in process, credit factory overhead. This is how we apply the factory overhead to the work in process.
Yeah.
Debit work in process, credit factory overhead. The actual and applied overhead is usually a little bit different. So what do I mean by that? There's always going to be some variance when it comes to the application of factory overhead, because anytime we use an estimate in business, it's usually going to be a little bit different. Okay, you're either going to be a little over, a little under, and we'll talk about over and under application of factory overhead. So if you under apply factory overhead, meaning we estimated it to be a little bit higher, but it came a little bit under, we call that under applied factory overhead, and you'll have a debit balance when that happens. If you over apply factory overhead, meaning we estimated it to be lower than it actually was, then you'll have a credit balance in factory overhead. And when that happens, we do this fancy thing called adjusting entries to fix it. So fun. Good so far?
Yeah, I'm good. I'm good.
Awesome.
I'm listening.
Very good. Thank you, Drew. Okay. So during the year, when we over apply or under apply factory overhead, it shows on our balance sheet for factory overhead, and we need to make the adjusting entry before the end of the year, so that way it doesn't carry over into the next year. Factory overhead should never carry forward. Factory overhead is a temporary account. Factory overhead is a temporary account. In other words, at the end of each year, we close it out to zero, just like we do with our income statement. And you all remember that from Accounting 201, hopefully. So when there's under application, to fix it at the end of the year, we debit cost of goods sold and we credit factory overhead. That's when we under apply factory overhead, we debit cost of goods sold and we credit factory overhead. That'll fix it, right? And if we over apply factory overhead, we debit factory overhead, that reduces it, and when we debit factory overhead. And we credit cost of goods sold, that increases cost of goods sold. And that'll fix it for when we over apply. So when we under apply, debit cost of goods sold, credit factory overhead. When we over apply, debit factory overhead, credit cost of goods sold. It's the exact opposite, right? In our example, it looks like our company under applied by $150, so we debit cost of goods sold and credit factory overhead. Work in process. Work in process, as you know, is when we are physically manufacturing. We're cutting the wood, we're assembling the guitar. It's work in process. Increased work in process stems from direct materials, direct labor, and applied factory overhead. To increase work in process, we increase direct materials, direct labor, factory overhead, and work in process. So every time you hear direct materials, direct labor, factory overhead, those are the costs associated with manufacturing a product. Fun stuff. So in our example, during the year, we completed one of our jobs. So we need to transfer our work in process out to finished goods. So when we finish a job, we need to increase finished goods and decrease work in process. Because remember, think about the flow. We start with raw materials. Then we have work in process. Then we have finished goods. Finished goods is when we're done working on creating the inventory, right? So we need at this stage we're finishing work in process. So when we do that, we debit finished goods and we credit work in process for that job.
Yes, I'm listening.
Awesome, thank you. So again, when we finish a job, we debit finished goods, credit work in process.
Got it.
Which leads us to our next topic, finished goods. Finished goods, those are the finished goods that are available for sale. Available for sale. That's our inventory that's available for sale. Finished goods. And the finished goods ledger tells us the total amount of finished goods based off of the cost for each unit that was manufactured. Here's an example of the finished goods ledger. Tells us the job order, the quantity, the amount. And then when we're getting ready to ship it out, we shipping order, quantity, amount, so forth and so on. Now, of course, when we sell a product, and hopefully you all remember this from Accounting 201. When we sell a product, if we sell guitars on account, we debit accounts receivable and we credit sales. That's when we sell it on account. But as you know, with double entry accounting, you can't just have that one entry. You have to account for what you sold. So we debit accounts receivable, credit sales. That represents the sale of the guitar. But now we, of course, need to take it out of inventory. So to do that, we debit cost of goods sold and we credit finished goods. That represents the sale of the guitar.
Right.
And as I said earlier, throughout the accounting period, we incur related costs. We call these period costs. These are the selling and administrative expenses that are incurred during the period. and we record those as period costs on our income statement as selling expenses and administrative expenses. So selling administrative expenses, they include things like marketing and shipping. Uh, those are selling expenses. Administrative expenses include things like office supplies and manager's salaries, the administrative stuff. So an example of that would be sales salaries, office salaries. So to put those onto your income statement, you debit off salaries, sales salaries expense, you debit office salaries expense, credit salaries payable. That's increasing the expenses during the accounting period. This is, I'm not a big fan of this particular slide because it's kind of jumbled, but you can see this kind of shows you the physical flow, so out of materials into work in process, out of work in process into finished goods. When we sell it, it goes to cost of goods sold. And throughout that process, factory overhead is applied.
Yes, I'm listening.
Professor, sorry to interrupt you. I just want to say, do we finish class at 1:30 p.m.?
Yeah, 1:30. I'm sorry, we probably went a few minutes over, but if you have to leave, it's not a problem. The session's recorded.
Sounds good. I appreciate it. Well, it was nice meeting you all, and have a great day.
Thank you. You
Nice
too.
meeting you.
Bye.
All right. Bye-bye. Cool. And we're almost done.
When are we going back to face-to-face class?
It's looking like probably the fall is what I'm hearing.
All right, I'm just wondering.
I hear you. And the cost flows are also summarized in materials, work in process, and finished goods, and they have their subsidiary ledgers, as you know. Inventory has raw materials, work in process, and finished goods, and each of those accounts will have a balance throughout the year, and it'll look similar to this. This is the income statement. Sales minus cost of goods sold equals gross profit, minus selling and administrative expenses equals operating income. For a service business, it runs service businesses, as you know, are much different than manufacturing business. On a service business, you can still use the job order cost system for a service business. An example of that would be a dentist. The job order would be the patient, and each individual patient is a job order, and each patient accrues expenses. So an example for a dentist would be the dentist labor, the supplies that the dentist uses. Those would all go onto the job order cost sheet for each respective patient. So this kind of tells you how that's used in a service business. And again, in this course, we're not too worried about service businesses. We're more focused on manufacturing. And job order cost systems accumulate records over time based on each job, resulting in total units cost compared to similar jobs. And this helps management to compare similar jobs to identify changes in costs among things like direct materials, direct labor, factory overhead. And that's it. We're done. Are there any comments, questions, concerns that you have at the moment? Anything for job order costing or anything else related to the class?
No.
Wonderful.
I'm fine.
Great. Awesome. Dylan, you okay?
I'm good. Yeah.
You're good? Great. Awesome. Edwin, you okay? Ezekiel? Yasina? Richard?
That sounds good.
Sounds good? Okay.
Sounds
Okay.
good.
Thank you.
Awesome. Very, very, very good. Well, thank you all so very much for joining me today. I apologize again for going a few minutes over. I am looking forward to working with all of you throughout the semester. If you ever have any comments, questions, concerns, you can email me, call me, set up office hours, whatever you need. I'm here for you, okay?
All right, thank you.
And again, to access everything through the classroom. So please don't try to go to Cengage directly. Only use the Blackboard Classroom.
Blackboard, got it.
Yep. So as you go through the classroom, and the reason for that is because everything links together, right? The grade book is linked to the classroom, so you need to access the homework through the classroom only. To access your textbook, make sure you click on. You can either click on textbook right here in the classroom, or the best way to do it is just to go to week 1 and select homework 16. So, so module 1, week 1, homework 16.
Right.
Click on homework 16. It'll bring you right to Cengage and to that assignment. And if it does not, you need to send me an email so I can get that fixed right away.
All right.
So thank you all so very much for your time. Stay safe, wash your hands, do the right things. And if you need anything, I'm here for you, okay?
Thank you.
Thank you all so very much.
All right, Professor. Thank you very much.
Thank
Have a
you,
nice day.
Professor. Have a
Thank
good
you. You too.